Hello, everyone. Welcome back to the Trading Room at Switch Markets Live. I'm Shane Vernier, and today we're going to talk some PPI. We've got a couple of big news releases out today. I think that the WTI crude oil news was a little bit interesting. I think the PPI this morning came in a little bit softer than expected. So we've got a lot going on here. We've got a lot of news. We got breaking news. Trump denies that he plans to fire Powell. Been a lot of firestorm around Trump lately, especially with this this Epstein case, and it's getting pretty deep at the White House. So we're interested to see exactly what he's going to do with Jay Powell. We think that he's probably going to can him eventually, or at least apply enough pressure to get Jay to start cutting interest rates. However, we're going to look at our interest rate expectations today, and something fairly surprising is starting to develop. I would be very careful if I was betting on those interest rate cuts to come in September. We've also got a trade idea that we put out yesterday in silver. This was our pick to click, our pick of the week that went out on the Switch Markets mailer. It worked well. It looks good. I'm very, very pleased with how our support level held up. And right now we're still bullish silver. Going to show you a horror story in gold. Full disclosure, I will tell you right off when we run into something that's really tough to deal with. I'm going to go over some stuff in gold futures today that I haven't seen yet this year. It was really a crazy 2 or 3 minutes. And unfortunately, if you wind up on the wrong side of something like that, it destroys you. And it's absolutely imperative that you have a maximum loss in your mind or a stop loss down in the queue. If you don't have those things, what happens is the market gets away from you. It'll stop you out. It'll run you out of the market, and then it'll turn around, reverse right back the way you think it is. Happened to me earlier today. Not real pleased with it. A significant loss, but still here, still fighting. When you've been through this stuff as long as I have, not really much phases you. But I don't like thin markets, and I don't like spikes in volume for no apparent reason. They're impossible for us to account for, and I almost call it an occupational hazard. That's why our risk management has to be dialed in. It has to be dialed in, because once one of these sucker punches comes and gets you, you'd never know when it's coming. And when it finally does get you, you wind up in a bad place. So I want to welcome everybody back. We got some good familiar rooms there. Let me see. Crazy afternoon with the rumor. Steve Francis, good to see you, Lita. Always a pleasure, Lita. Dragon 131. Tuku, the powerful Tuku in the room. Good to see you, Tuk. Definitely welcome. Team Arena, good to see you. Happy hump day at all. Happy Wednesday, everybody. Today's definitely a pedal to the metal day. Just not much going on right now. This is turning out to be a real tricky week to be trading. I don't necessarily know why, other than we're seeing the news cycle slow down to a crawl, and we're seeing participation dry up a little bit. The markets are a little bit thinner than what we think. So a lot going on today, but not much going on today. Talking in circles, that's okay. We do that sometimes. All right, guys, let's get after it. This will be the big story today. I mean, Trump denies plans to fire Powell. He says it's highly unlikely, and you really wonder. I'm not going to sit around talking about the Epstein file. Everybody else is. I'm not going to do it. You wonder the impact that sort of the developing scandal that you have in Washington, D.C. has on a decision like this. I mean, believe me, if Trump felt like he had the leverage to do it, he would have said, yeah. He'd say, hey, we'll wait and we'll see what happens. Didn't say that today. President Trump denied that he has plans to fire Federal Reserve Chairman Jay Powell, contradicting a senior White House official. House Republicans said Trump spoke about the plan Tuesday night, Trump adding that firing Powell was highly unlikely. The biggest thing that we have to remember here is that you got a scandal going, and a scandal means that all bets are off. And Trump's the kind of guy that loves to use leverage. He loves to get his way. Typically does. I mean, if you've been watching, American history over the last year or two, he's won so many different battles that this seems to be like one that if he felt there was leverage there and he wanted to get rid of Powell that bad, they would just get rid of him. And there really that would be that. I mean, his supporters are going to go with that, and pretty much everybody's going to say, okay, well, let's see you, Jay. It wouldn't necessarily fire him, but they would put enough pressure on him to step down. And what that does to your market dynamic is it really throws some definite shade on what we think is going to happen with interest rates. Now, right now, we don't expect anything to happen, and I'm going to cover PPI in a minute, but I have to tell you that Trump getting rid of Powell and Powell hitting the road is a much bigger deal to interest rates than PPI was today. Believe me. So now we're looking at 97.4%, 4.25 to 4.5 is where we believe we're going to be at the meeting. We'll have FOMC live for you in T-minus 14 days, no hours, 55 minutes and 10 seconds. Can't wait. I'm already getting ready. Can't wait to see what Jay Powell says, because he truly is on the hot seat. But this is what we're thinking about here. September. What happens in September? These odds have been all over the place the last 2 days. That's the reasons for your volatility in the market. That's why there's some things that are going crazy and other things aren't, because this chart right here, when are you going to get that first interest rate cut? 40.5%, 58%, 1.5%. What do we think is going to happen? We think it's about a 60-40 chance that you're going to get at least a rate cut in September. What does all that mean to the U.S. dollar? Well, I told you what I thought about it yesterday. I'm not going to really go over it. I don't like repeating myself too much. But this chart right here is sort of telling us that the USD, the bottom for the USD index, could be in. Now, if you get in the way back machine, you can see that we're trading the DXY at levels we last saw in February 2022. Did we have a crossover back then? Right in here. 920 crossover is powerful on a daily time frame, but just to blow it up a little bit, right in here, you had one here. Technically, you wouldn't have got stopped out. You'd have got stopped there, right there, right there. You had a bid. So these levels, why are they important? They're important because what we're doing right now is we're trading. History is repeating itself. We're trading at the same levels. So is this the bottom for the USD? It's hard to say that this is the bottom for the USD if we're going to cut interest rates. Personally, I don't believe we're going to cut them. I'm going to go on record as saying we're not going to cut, and I think Jay Powell's gone. He's going to announce his retirement probably, maybe at this next meeting, maybe right after. But we know this is his last term. He's getting down to the end of his tenure as Fed president. It's been a tough one. Do they cut interest rates on the way out the door? I don't know. I don't know that. I mean, if your career is already finished and you know you're going to move into the private equity situation, which is exactly what he's going to do, he's going to move into probably go to work for a big commercial bank or write a couple of books or do something. Is there any pressure for you to cut interest rates? No, there is not. And listen, I used to think Jay Powell was a neutral person. I really did. Not a political animal. He's a political animal just like everybody else in that town. Why do I say that? Because last fall, September, he cut those interest rates by a half a point. And they knew inflation wasn't entrenched, or they knew it was entrenched. They knew that you couldn't cut interest rates and expect to do anything this year with inflation. They cut them anyways, cut them before the election to influence it. That's what happened. That's the bottom line. I don't care if you're a Republican, Democrat, Trump or non-Trumper. I don't care. That is what happened. So is there a reason for him to cut on the way out the door? I don't believe so. So if, in fact, there are no rate cuts coming, then, yeah, the bottom could be in for the USD. This could turn out to be one of the greatest trades of all time. If not, if they do decide to cut, then you'll probably see another leg lower out of the DXY and the US dollar. I would say probably 95-ish. But do I like this buy? This is a pretty good position buy. Stop loss is going to be right beneath that zone right there at 96.30, and then this long right here is going to be somewhere right around 98. It's not the worst play in the world. You would take that trade probably looking for 100 or 150, and you may get it. So what I'm trying to say is it all sort of dovetails, and this has all come to the forefront since the Trump administration has really been sworn in. And it has nothing to do with politics. This is the way that business is being conducted now. There's a lot of rumors out there. There's a lot of news items. There's geopolitical issues. There's all sorts of these bills, these tax cuts, and all this stuff. They're all external factors, and they're shaking up the markets. I'm watching traders spin around in circles. They don't know what to do. And I got to tell you, these are tricky times. Fall back on your technicals. Risk management is your friend. Be sure that you do it right. You don't want to get caught. Caught dreaming. You don't want to do that. And I'm going to show you what happened to me earlier today. Wasn't the trade of the century, wasn't the loss of the century, but it wasn't a good one. And just sort of saw some volume hit the market real quick. I'm going to show you that. It seems like that's more prevalent given this environment than it has been in the past. But I do want to recap this XAG USD, and I'm way behind on the live chat. I'm going to get right with you. This was a really a good trade that we talked about yesterday. I talked about it in the pick of the week. Is it a banger? It's a pretty good trade. 37.64. I was talking about 37.75s, maybe 37.50s, right on that 38% retracement level on the weekly. And if you take a good look at this zone, it gives you a real good idea of what happened here. Let's go down to the daily. You see your daily. That's a beautiful thing. Late yesterday, we hit that support zone and then bounced up. Those are tough to beat, guys. Those trades, those type of trades, when you've got sort of a trending market where the fundamentals point to the top side and you also get a great technical zone involved, that's fantastic stuff. And that's one of those things that I absolutely look for every single day in the markets. Do the fundamentals suggest that we're going to go higher with silver? Yes. Do the technicals give us a good entry point? Yes. What about the news cycle? Is it active? Fairly active. We had PPI again today, CPI yesterday, PPI today. That's going to bring alive the silver market. Gold has been a little bit different story. It's been a rotational mess. But for today, silver, really strong play. traded beneath yesterday's low, sort of washed out a lot of those longs, and now the reversal's on. I call that a failed auction. Anytime you have a key level, a previous week's high, previous week's low, previous day's high, previous day's low, and you only trade down there just a little bit, you don't really extend your range, but reverse back up into this range, I call that a fail auction. In this instance, it's an incredibly strong bullish indicator. Incredibly strong. That's for sure. Let me see. T. Marine, I agree about Jay Powell. That's how I see it. There's a lot of talking heads out there that go on and on and on about how great they are at predicting this future and 5D analysis. And, I can look forward. And nobody knows the future. Nobody knows the future. Jay Powell may just wave at everybody and say, I'm staying as long as I want, and I'm going to start raising interest rates. He has that kind of power, believe it or not. And listen, people are going to say that the FOMC votes, and they all do vote for policy, but believe me, Powell is going to be the final verdict there. Why? Because everybody else on that FOMC is probably going to have to be doing business with Powell at some point down the road. He will go to work in the private sector almost immediately. See what Greenspan did. See what Bernanke did. It's always the same. See what Janet Yellen did. How about Yellen kicking around K Street in Washington, D.C. until she got the Treasury position? Jay Powell's not going anywhere. Jay Powell knows that Jay Powell can still make money. The question is who's he going to serve? Is he going to serve some private interests and say, hey, don't cut rates this year. Stick it to the Trump administration. That's very real. That's very real. And when we start talking about interest rate expectations as traders, we kind of have to know a little bit of that. Now, this isn't a political stream. I'm not going to sit here and talk politics. Your politics are different than mine. Mine are different than my neighbors. They're all this. Believe me, everybody's got a point of view. But understanding the inside baseball and the different angles to this stuff is hugely important. It's hugely important. And I know there's a lot of you out there that are very smart, that understand that, one thing does impact the other, and to pretend that it doesn't is a bit naive. What's going on with crypto right now? Crypto's on fire. This was our 920 crossover on the daily, quickly becoming my favorite trading strategy. Take a look at that. 12.39 a buy, 12.39 buy on Shiba. Look where Shiba's at. Shiba's rocking and rolling up above 14. I mean, this is absolutely huge. This is a really a sweet move off of what I would call a really strong signal. Now, do all the signals work? No, of course not. Nothing works. But when you get in on a move with the 920, then you really get into it. Sorry, I'm way behind on the live chat. Andrea, good to see Andrea. Welcome. Hi, Shane. Always look forward to these streams. Great morning of trades. It's great to hear, Andrea. I'm happy that everybody had a good morning. I'm going to show you why mine wasn't necessarily the best. I have a hard bag in the garage. I had to go work the hard bag for a few minutes, blow off some steam, get on the treadmill for a good half hour. But I'm absolutely ecstatic you guys are making money today. It's good to hear. We've had some pretty good trade ideas. I'm going to recap a Euro USD one here in a second that was a close but no cigar. But we're getting there. We're getting to where we want to be this year. Bitcoin is another thing that I absolutely have to mention because we had a buyback here on this 920 crossover in Bitcoin. But right now, the top side call of 125, pretty good. Absolutely pretty good. Right up there at 123, 250. So, we're right around that 125 area. It's impossible to know where the sellers are going to step in, but they definitely protected 125 on the first approach for Bitcoin. So when we start looking at this, this is sort of, this is your base 920. I'm going to work some Fibonacci's here because what I would like to do is really see exactly the depth of this pullback. Right there, nice big spike pullback, sort of wiped out that 38% level and then retraced. You still have to be bullish above 38%, 117, 210. Pretty good entry point if you bought those today. I still think you're going to trade 125 and you're going to do it relatively shortly. I would say within the next couple of days. Think about it. If in fact we do cut interest rates and we do see that dovish monetary policy, what happens to crypto? It's starting to come out what was in the big beautiful bill with regards to crypto. Mainstream adoption is the name of the game right now. The U.S. government is going to get into the crypto business, and that's absolutely huge for crypto. So if you got in there and you're a hodler, you killed it with Bitcoin. I had a gentleman come up to me in the gym yesterday, taps me on the shoulder, and he says, Shane, I remember we were talking about Bitcoin a while back, and my daughter and her husband actually rolled over all of their holdings, their 401k, into Bitcoin, and they did it like back when it was in 30, 40,000. And I went, wow. What a score. And then my big question was, what are they going to do now? I mean, let's say you got in at 30 or 40 and you're printing 120. That's a 4X turnaround in 18 months, something like that? Do you stay the course or do you take the money? Be hard for me to be, boy, with your retirement, you just went 4X that fast. That would be really, really difficult for me to stay the line or hold the course for $1 million, but a lot of people have different goals. But this Bitcoin, I mean, this is until proven otherwise, this is really a serious buy. We also had some big news in Ethereum. Ethereum absolutely took off today. It was one of the big investors, I think it was Peter Thiel, came out that he owned a 9% stake in one of these Ethereum platforms. Absolutely huge. That was huge. And why? Why is that such a big deal? It's not because these folks are rock stars or they always win. They don't always win. They just have enough money where they can lose a little bit and still be okay. But it's mainstream adoption. It's institutional adoption of crypto across the board. Now we're not just talking about Bitcoin being the big dog, and it is, no question about it. But now you got Ethereum back up over 3,000, potentially maybe going to make that run to 5 or 10,000 like many people believe. Ethereum's up big. How about Dogecoin? Elon Musk, a lot of controversy, still up. Doge is still moving higher, up over 20. So when we talk about crypto, you got to be on the bullish side of this right now. You really do. And for me, I mean, I just don't know how high they're going to go. Does Bitcoin go to 1 million, like Kathy Wood says? I don't know. Maybe. Anything's possible in this world. I've learned that over the years. Anything's possible. In any given moment, anything can happen. I'm telling you right now, you want to be long crypto. This administration, I have a feeling, is going to see to it that crypto has minimal regulation and that it also is always on the rally. And that's what I would say. So I don't know if you guys made money trading crypto today, but anytime folks are coming up to you in the gym and they're going, oh, the crypto markets look good, that means either one of two things. Either it's time to get out and take profits or the market's that red hot. Let me see. T. Marina, do you think he will raise rates on his way out? I think it's absolutely possible, T. I think Jay Powell could raise rates to get that big job at Goldman and Sachs or Citigroup or wherever, Wachovia. There is no more Wachovia, but one of those big dogs, because that's his next stop. Probably it could even be a lobbying firm. God only knows. We don't know. Let me see. T. Marine, I got half a Bitcoin at 30K. I love a big winner. And that's a big one. So good for you, T. That's fantastic news. Yes, sir. Good to see you. Hey. All right, guys. Welcome to the Switch Markets community. Remember, we are melding the How to Trade group and the Switch Markets community. If you do need a broker and you are an international client, be sure to check out Switch. Actually, our Switch Markets TV channel. We're going to have an exclusive event for you tomorrow, and that is going to be a webinar, one of our first webinars, a formal webinar. I'm going to do that just for the Switch customers. So if you're joining us on all these other channels, be sure to head on over to Switch Markets on YouTube, and you can catch all the action there, or you can catch it in the How to Trade trading room. You can certainly come on in and catch it there. Actually, no, we're not going in How to Trade tomorrow. It's going to be exclusive on the Switch Markets YouTube channel, so be sure to check that out. Now, one thing about Switch Markets I was asked to mention today before we go any further, it's about the service suite. The service suite has definitely increased its scope of providing liquidity to the clients. So there's going to be a real streamlined process to get you up and trading. Traditionally, you have to go through a KYC program or process, which can take upwards of 2 weeks, and that's just typically the industry standard. Well, there's a way now that as you're going through that KYC, your funds can be held in a separate safe wallet from your trading account, and you're still able to trade. Take a look at that. That's really been a quantum leap forward in the Switch Market Service Suite. Now, there are limits on it. Apparently, trade big size, you're going to have to pass your KYC, and you're going to have to be approved by the firm. But there are some options with these segregated wallets to where you can store funds safely and still engage the markets without having a full-blown account open. Take a look at that if you're wanting to get in right now at Switch. That's something that the back office team was very, very pleased with. I think it's fantastic. I see a lot of that going on in the futures markets right now, especially with ACH transfers. That's for sure. All right, week 29, U.S. PPI was the game today. So what is PPI? PPI is just a producer price index. It's inflation from the producer's perspective. That's it. Core PPI came in flat, beneath expectations, if you believe that. I mean, it came in flat. Core PPI year over year actually came down. Wow. PPI year over year, 2.3% came down. PPI month over month came in flat. This is what we want to see. This is what we have to start seeing out of inflation. Funny, the producers, prices aren't going up on the producer side of it, but prices are still going for the consumers. Something's got to give. We've got to start seeing CPI pull back, or there really is no case to cut interest rates, in my view. In any case, the state of inflation, producer prices in the United States increased to 148.28. Producer prices in the United States average reaching an all-time high of 148 in February. 148 in February. So we're off of those record highs significantly. That tells us that what? We're sort of flatlining. We need to see this out of CPI. This is what we need to see. When the next time I go to the supermarket and I fill my cart up, it can't be $10 more than the last time. It can't be. So we've got to start seeing this in consumer prices, or there's going to be real questions about what the heck the Fed's doing, what the heck Jay Powell's life's about, and what the heck the administration's doing. Consumer prices have to come down. We're starting to see the slack develop on the producer end of it, and that's great. Theoretically, that lag should bring those consumer prices down. It is not happening. Something's got to give. Something's got to give. This is a big deal, guys. This is a pretty good set of numbers. Suggests that maybe you don't need to cut interest rates. Maybe policy's in a good place, or maybe you can cut rates. I don't know. I can tell you there's a major disconnect between PPI and CPI, and it's really hurting consumers. All right, some other news of the day that I want to cover real quick. NBA 30-year mortgage rates are up. What does that suggest? It suggests that, some of the big banks, some of the lenders, some of the 30-year lenders see interest rates the way that I see them. Maybe they're going to be higher for longer. I hope I'm wrong. I would like to see rate cuts just because it makes life a little bit easier from a consumer perspective because you get more liquidity. But in the long run, it's not necessarily the best thing for business, especially if it's going to send prices higher. Consumer prices are already at an all-time highs. They need to come down. NBA 30-year mortgage rate, though, the long-term lenders believe that perhaps we're going to stay higher for longer. But take a look at this. Mortgage applications, negative 10%. That's way down from a 9% gain. That's not seasonal either. We should still be seeing increases in mortgage applications. A lot of folks are just giving up on the housing market. It's tough out there. It's tough out there to find housing, affordable housing, affordable, desirable housing. That's what I would say. That's what I'm experiencing right now I'm in rural America, guys. There is not much supply out here, and the supply that is here is vastly overpriced, about 20% in my view, and it's been a real challenge to find anything worth buying. However, there are still great places out there, and if you're in one of them, congratulations. The rest of us just got to be patient and wait for the game to come to us. But right here, interesting stuff. Not a good sign out of the mortgage department. Not a good sign out of mortgage applications. I look at those every week because they give us a chance to see what lenders are thinking, and that's very important. Why? Because lenders know more than we do. They know more than we do. Let me see. Ahmed. Good to see you, Ahmed. Welcome. Yes, sir, man. The JPY came down hard. Glad I was on the right side of price action. Yeah, that's fantastic. We'll look at the dollar yen as well. Let me see. T Marina, KYC as a know your customer. I think something like that. There's an onboarding process no matter what brokerage you use. My futures brokers, it was relatively straightforward, but they do tend to move a little bit faster. Some of the OTC brokers slow down a little bit and take their time. And the reason why is you like to fully vet your customers. That's a different department, but I was told that they want to streamline and aggregate sort of a couple of steps of that KYC and get folks up and trading out of a designated segregated wallet that is safe. Your funds have to be safe. If they're not safe, there's no point. From what I heard this morning, it was a major step forward for the brokerage. Authorizing, yep, absolutely, T. Okay, guys, let's go ahead and look at this Euro USD. This was a trade idea that I had out earlier, actually yesterday. This was one that I was looking at very, very closely. Still love it. Still absolutely love it. It came in great on the futures market. I'll show you that. But this right here, spike low, spike high, there's your pullback. It's something right around 115.37. So if you were looking at 115, maybe 45s, that would have been a great buy. We just didn't quite get there. Our low is right there at 115.62. That's the low of the week. We just aren't quite there just yet. So let's go to a daily. Do I want to buy or sell right now? Neither. Really neither. I mean, you can see what PPI did to price action in the Euro USD. That zone right down there is absolutely fantastic. Absolutely fantastic. I think if we get another opportunity, maybe tomorrow, then that trade idea will stand. So those ideas are still out in our analytics thread at How to Trade. Head on over, give me a follow. Those get beamed out to your email inbox right away. But I'm liking what I'm seeing out of the Euro USD. In a perfect world, rotation would really set in and be the rule, and we would just see sort of this price action, for the immediate future, and that would give us an opportunity really to hit our support zone repeatedly. Those are the kind of trades you absolutely love. Am I buy or sell right now? Neither. Price has to get back down. It's got to get right now. You're in a state of equilibrium, and what I mean by that, you see yesterday's candle and today's candle. You're in that state of equilibrium, which makes life really tough. We don't know if we're going to break high or low. More than likely, we're just going to rotate around. Well, that gives us an opportunity to trade it when it does break and get into disequilibrium. Right down there. then we'll have a chance maybe to play the Euro USD. So you just got to stay patient. You got to stay patient and see what you can do. Maybe in a different market for right now. All right, I did want to show you the futures market, though, on this one. This was a pretty good one. I felt strongly about this level on the weekly. You can see that this is sort of an according to Hoyle type of an Elliott wave. Right there would be your 1. There's a 2. There's a 3, 4, 5. Now, the question is what do we do after 5? Well, some people like 6s. I think it resets myself. But your Elliott waves, always remember, your 1s, 3s, and 5s are movers. So right now, we're still working on really the back end of this uptrend, which looks great to me. I mean, I'm absolutely ecstatic with how this trade panned out a little bit earlier today. Loved it. And essentially, you guys know, I got a few tricks in the bag. This is one of my favorites, especially when it comes to futures. And there it is. I mean, that's a beautiful thing. Right there's your low, little swing low down there at 111.58. Swing high is up there at 118.89. And then your pullback is right there at about 116.10. And what do you got right there? In September, Euro FX futures low is 116.10. Boom. That's a perfect trade. Very good one. A very good one. So if you got that one on the futures market, congratulations. If you got involved in some of this nonsense, which is what I was involved with a little bit earlier today, it didn't treat you very well. And I really want to point this out, especially if you're trading thin markets on holidays or thin futures. You've got to be ready for this type of stuff. This was a disaster. 1 minute chart. Look at the volume that hit the market. 6,170 contracts hit the market in a minute. That's what we call a sweep. A sweep high. That's institutional participation. That's somebody put in a block order, and then the algos ran with it. So before we get carried away and you say, okay, Shane, it's still a minute. I can tell you right now I was on the wrong end of that move, and I didn't even have time to blink. This is a 1 second chart. I don't go to 1 second charts very often because it takes me forever to find what I'm looking for. But it's important to really show you guys the volume that was hitting the market on that 1 second basis. 1 second, 1,001, 1,002. That's what we're talking about. This is the power of money. This is the power of big traders versus little traders, and why we always talk about risk management and we always talk about stop losses and understanding how to trade your size effectively. It's hugely important because the people that did this have more money than you do. They have more money than me. They have more money than everybody. There's your first 1 second. Remember, 1,001. 9:16:08 a.m. my time. 11:16:08 Eastern. 169 contracts were traded in 1 second. And it gets better. Right there we see a dip. Okay, not bad, not bad. And then it comes on in earnest. Then the volumes come on. 235, 255, 154, 205, 199, 305. That's a staggering amount of volume. And then it turns around and comes back the other way. 322. And then you can see the sell-off develop when all the sellers popped on. The problem with that kind of trading is you don't know when it's going to come. Now, we could say there was a news event out. There wasn't. We could say there was a rumor dropped. There wasn't. That right there is a function of order flow. And order flow is hard. A lot of people want to learn how to trade order flow. And they say in order flow. And I say about the only constants I can give you with order flow is when key levels are involved. There was no key level there that drew participation. Somebody came in with a block order and they hit the market and they hit it hard and those algos switched on. And I want you guys to understand how fast those algos can get in and out. They are wired directly into the exchange. They will beat everybody in and out. You cannot compete with them. We're talking about milliseconds, microseconds even. It's so fast that by the time you blink, it's over. So if you're the wrong way in one of those, you get into big trouble. Unless you're trading a sizable or manageable size of your account, and you have a stop loss somewhere in the queue. Then you just take the loss and you move on and you go, it's an occupational hazard. Take a look at this 30-minute chart. My sell, I believe, was right around 30. I'll find it here in a second. It was 30. It's right in here. It was right in there. Was my range number, something like that, 56, 54. I don't remember. I'm going to try to forget. Okay, that's where it was. That was my sell looking for a downside scalp. Didn't get very many ticks. And it happened so fast, you really couldn't manage it. You couldn't get in and get anything. So you've got this going, right? And then look what happens. You come right back down. Come right back down and right back down. Was the level wrong? No, the level wasn't wrong. Look where we're trading now at my level. The problem is you can't hold these positions. When it goes against you that far, 33.54 up to 33.85, and you're looking at $31, 310 ticks at $10 a tick, trading 3 or 4 contracts, that's damage. Nobody can. I mean, if you're a few $100,000 in your account, you can trade like that, but price comes right back down. That is the power of volume, guys. That is the power of order flow and volume. That's why we stress key levels. That's why we stress time of day to try to figure out when the volumes are going to be relatively stable, when we think we're going to get a big kick in action, and how we can trade the subsequent volatility. This right here came out of nowhere, right? So what are you looking at? 39.44, 39,000. We probably have only traded 110,000 today, maybe 120. So that was what, 30% of your daily volume came just in those seconds I showed you? That's amazing. How about the next 30 minutes? 38,000. This is a high volume area. And then you can see volume drops off. Things sort of turn back to normal. Now we're just sort of milling around being the normal gold market. My point is this: volume dictates everything, in futures especially. When you see volumes like that kick on, you've got to be extremely careful, because if you're the wrong way, you're in trouble. Now, if you're the right way, you're making money. But that's a little bit of a lesson on order flow. Always understand that no matter how good your system is or your indicators or any of it, if you're on the wrong end of that order flow, you're going to get destroyed. It's just the way it is. Team Marina, that's insanely ridiculous. I couldn't believe it either. I haven't seen anything like that. I'd probably go back to last August in the carry trade debacle with the yen. I haven't seen any volume like that in gold, not like that. Let me see. Angelique, I trade supply and demand, and that is a little different from order flow, correct? Yeah, order flow. You're absolutely right, Angelique. What happens is supply and demand zones. So like if you were trading supply and demand zones here, you might have made some money. You probably would have had this zone up here, this order block, that you probably would have had that isolated on your chart, or at least been looking at it, something like that up there. You said, okay, well, there's sort of a liquidity sweep. Maybe I'm going to look to sell right up here. Now, whether you could have taken that kind of heat or not, I don't know. But that would sort of be, I guess that would be a demand zone, or no, that would be a supply zone. That would be your selling area, and then your demand zone would probably be right down in here, something like this during the overnight, something like that. Something to think about if you're a supply demand. But no, you're not necessarily trading order flow. Order flow in a nutshell is when these buys and sells are hitting the market. When these buys and sellers are hitting the market. Okay, a buyer comes in and a seller's there. They trade one contract. That's a deal. That's one contract traded. And we showed you that 1 second chart where all of a sudden we're trading 400. 400 of those deals are being made in a second. That's risk management. That's an occupational hazard, and there's really nothing you can do about it. Let me see. Ahmed, is there a way I can predict a liquidity sweep limits for long-term or swings, or to keep the stop loss far away? It's hard. Listen, people today are going to be just going on and on about this being an incredible liquidity sweep up here, and that's all great. But the bottom line is this: where the hell are you going to sell it? Where are you going to sell it at? I mean, pardon my language, but you could sell it right here all you wanted. Right up here at 33.75, you could do it. The problem is price went up to 33.85. That's $10. That's another 100 ticks. Who has that kind of staying power? And once you go up to 33.85, who's to say that the price is going to come back down? We had a pretty good read on this market today. Gold is rotational. It's not going anywhere. You're only up about 0.65%. But that manic type of behavior, that's been one thing that I've pretty much dedicated my life to doing this, and that's an unavoidable part of it. You just got to take your loss and move on. Make sure your loss is manageable. Don't lose your whole account. Something to think about there, guys. But real good lesson in volume, order flow. When those kind of orders are hitting the market, you almost just have to get out of the way. Or if you're going to trade it, you've got to trade it with your risk management really intact. Or a prop firm. Any proper recommendations looking into getting into futures? Angeli, a prop firm? I don't like recommending prop firms. I really don't, because I don't vouch for them. And I don't know. See, I mean, I know the people at Switch Markets. I know the people that run it. And I've worked with them I've known them for a long time. I haven't worked with them, but I've known them. And as far as that goes, they're going to do right by you. As far as the prop firm goes, I can tell you a couple here in the United States I've had problems with. I'll do that on a private message, though, Angelis. So if you want to come on over to How to Trade, send me a message. I'll tell you which ones that can be trouble and which ones can be good. There's an industry one out there that I did a lot of business early in my career with Top Step Trader back in the day because they were really the only one. But there's many more now. And the best thing you can do is go online, check out their reputations, go to Trustpilot, figure it out. Figure out exactly what you want to, really what you want to trade and what you want to get done, and see who services that the best, and then make sure they're paying out. Because if they're not paying out, don't even show up. You got to be able to get your money, guys. All right, so that's a good look at gold. As far as what we think is going to happen in the future here, I'll tell you what, I'll pull 2 more charts and we'll call it a day. If you have any markets you'd like me to look at, just go ahead and throw them in the live chat. I'm more than happy to look at anything you guys want. The idea here is just to help out as best I can. Just remember, that volume spikes and that order flow goes crazy. Look out. Right now, sort of a bullish bias on gold, but it's not doing much on an intraday basis. Just keep an eye on 3,500 here. To me, that's the big number. We're trading 33.52s. Would I want to be long or short right now, gold? Probably neither after my experience earlier today. I mean, that's your 4-hour chart. It's absolutely horrible. This right here, I mean, take a look at what happened, guys. I mean, we talk about liquidity sweeps and smart money concepts. What the heck is that? It's a liquidity sweep. It's a stop run. It's a stop run. We showed you the volumes. We showed you what was going to move the markets. I mean, who's to say that Goldman or JP Morgan didn't come in there and say, okay, you guys start throwing big block orders at it and just keep buying it, and then we'll get in on the reverse slip there, make all our money back and then some. Who's to say that didn't happen? Point is this. This was your obvious stop out point for everybody that was short. This area right up here, boom, boom, reversal. That's a pretty good amount of money. I would still be watching this probably to the top side, but I wouldn't go near this market dynamic or market structure really until it evens out a little bit. You can even see it on the daily. The daily's no good either. You could put Fibonacci's here and here. I would avoid it. I would avoid it like the plague. If I was going to make a play, potentially, and I'll be back in the saddle tomorrow, but you probably would want to make a play right around your SMA or your EMA down there. My 13-period EMA at 336, and also the Bollinger midpoint right here on the daily, which is right around 333, something like that. That would be my play on spot gold. Let's see, what else do we need to do? Ethereum is doing okay today, trying to break important resistance after it may be really going more and more. I think Ethereum, judging by Bitcoin, Ethereum's probably going to 5,000. Bitcoin's going to 125, and if we crack 125, next quarter handles 150. All right, everybody, I want to thank you for joining me today. We've got a lot of trades in play. Keep an eye on that Euro USD. That silver trade was an absolute banger. And just the chaos in gold. The DXY looks like it's setting up maybe for a potential bottom. If we do get that crossover there on the daily, then we may be looking for an intermediate term bottom there an intermediate term long for the dollar against a basket of currencies. As far as the rest of it goes, I mean, we could certainly look at anything you'd like. We could look at this dollar CAD. U.S. oil really didn't do much today. That's why I didn't really even cover the inventory numbers. Perhaps we'll wait for a move and I'll talk about it tomorrow. But this dollar CAD, it's just really choppy, really ugly. I had a question about the dollar CAD in private message earlier, and I just remembered to cover it. But this is really hard. This stuff here is hard. 38% didn't really work. 62%, we came right down there to 136.89 and then bounced. Our lows 136.79. Pretty good trade. It's just so uber tight. I mean, it's so tight in there that you've got to figure some other way to trade it. I would back up maybe to a monthly chart. Where are we at here? Do we have anything really to go on? And yeah, we do. Big bearish trend. Why is that? Because the dollar's been on the ropes the entire year. You've also got WTI crude sort of being priced a little bit higher than I figured it would be. I figured we'd probably be down in the mid-50s by now. We're not. This area right up here, 140.20, is just an absolute banger of a sell. You really couldn't pass on that. How about a weekly? Weekly is just ugly. That's what I call bowling shoe ugly, guys. That is ugly. That's a Christmas sweater. That's a Christmas sweater ugly. That type of dynamic on the weekly. About the only thing that I would even consider using there off of that weekly chart would be my moving average, which is right around, let's see, that's our 13-week EMA. And that thing's right around 137.79, something like that. That might be a pretty good sell. All right, everybody, I'm going to go ahead and sign off today. A lot going on, guys. Keep an eye on the news cycle. Keep an eye on the news cycle. This feels like we're getting into some crazy territory here. The Epstein thing's it's just gonna keep getting more and more ground. It's not going anywhere, and it might have put enough pressure on Trump to where they won't move on Powell. But I mean, believe me, the way that this administration works, as soon as Trump says, I'm not even thinking of firing Powell, then they come out and they'll make a move against him. That's just the way that they've shown us all year long, that they're not afraid to come out and say, we're not doing this, and then do that. It's just the way it is. Be ready, guys. Be ready with your money. Be ready. Be safe. Be safe. And if you run into order flow like that, you run into some of that stuff we saw in gold today, stops down, leverage, and check will save you. All right, I want to say thank you to everybody that saw this stream. Anjali, Ahmed, T. Marina, Tuku, Andrea Gorwal. Thank you, everybody. Too many more to name. We're going to be back here tomorrow. We'll be back on the Switch Markets channel exclusively tomorrow for Switch Markets clients. We're doing a live webinar, 5813 EMA. Head on over there on YouTube and check it out if you'd like. If not, we'll be back Friday with a stream. We'll cover the week that was. We'll give you some more trade ideas. There will be a trade idea out tomorrow as well. So we're ready to rock and roll here, and also keep an eye on all the YouTube channels and everything else. All right, guys. You have a fantastic trading session. If you need anything, head on over to How to Trade. Send me a private message, and I'll be sure to get back to you in short order. Until then, trade the action well, and we'll talk soon. See ya.